Hello, this is Bennett Tchaikovsky, and welcome to Adjusting Entries Part 5s, and these are for contracts without cash advances. Disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College, the South Orange County Community College District, or Chapman University. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2019 by Bennett Tchaikovsky. I encourage you to share this presentation and share links to this presentation on an unmodified basis. If you modify the presentation in any way, please email me prior to doing so at 1812cpa@gmail.com to discuss. Note, the author does not claim any copyright whatsoever in any companies or organizations mentioned in this presentation. Rather, the other parties are their owners of their respective copyrights. So we're kind of going down here, going down the final part of the list where we're having a contract assigned, but no cash is involved. And if we're performing services, we have to make sure that we're recognizing revenue even if we have not been paid. And what's really, remember, with adjusting entries, we don't touch cash. We just need to make sure that is the revenue correct? You know, do our revenues reflect what we've earned? Do our expenses reflect what we've used? Do our assets reflect our future economic benefit? And do our liabilities reflect our future obligations? We only make these adjusting entries after we've recorded the initial transactions into T accounts. And then what we're really doing is after we've done all these initial transactions and we're going through and asking ourselves those questions. Most importantly, we are never making an adjusting entry that involves cash. One of the things we're going to be looking at here are examples of two companies and they're invoicing each other. I want to just bring this up because it's very important. When you're working at a company, you need to, once you've completed your services, you need to send your client an invoice as quickly as possible. And the reason is that if you don't invoice your clients promptly, you're gonna have to go to a bank for a loan and have fun with that one, or do some other kind of really bad financing, if you can get it. Also, it's understanding what the payment terms are up front. Some companies are now stringing out smaller companies for days, meaning that they won't pay you for 150 days. And with that being said, just because a company is large like Lowe's doesn't mean that you're necessarily going to get paid very, very quickly, or within, I would say, like 30 days. And so again, I don't know if Lowe's is like that. I've heard rumors, but again, it's a rumor. But again, the key is before you do business with anybody, and it doesn't matter how large they are, how great they say they are, or whatever it might be, do a background check, do a credit check. This goes for your employees too, to the maximum extent that you can under a law. You need to know who you're dealing with. And if you don't, you're going to pay for it later. I've made many mistakes on this front, and I cannot tell you the importance of knowing who you're doing business with. So let's kind of go here and look at our first example. So I'm going to switch over here to the Google Sheet. So Isla La Vista, I'm close, ILV hires Park Dog Inc., PDI, to perform consulting services. I am a gaucho, and UCSB is awesome. A contract is signed between ILV and PDI on April 1st, 2019, whereby PDI will charge $8,000, but whereby PDI, hold on for a second, where PDI will charge ILV $8,000 per month from April 1st, 2019 through March 31st, 2021. So on the first here is that on July 1st, PDI sends ILV an invoice for $24,000. On July 15th, they pay $24,000. On November 1st, PDI sends an invoice for $32,000. And then on November 15th, ILV pays PDI $15,000. Okay. So we're asked to go through and prepare journal entries for this. So I've hired Park Dog, so I'm going to be paying Park Dog $8,000 per month for those services, and that's how it works. When I sign a contract on April 1st, generally, I'm not really going to be doing anything. A contract is just really showing that two parties have entered into an agreement. Now, where I will need to record a transaction is if it's going to be a lease, but that's not the situation here, and that is intermediate accounting. Or if cash is involved, but here no cash is really involved. They're just kind of saying, well, they're going to charge us $8,000 per month. So the first transaction here is on July 1st, 2019. They're sending us an invoice for $24,000. Now let's kind of think about this. On July 1st, how much work has been done on our behalf? Well, on July 1st, so right over here, July 1st, so we signed the contract on April 1st. And when we sign that contract, basically they're going to be charging us $8,000 a month from April 1st, 2019 through March 31st, 2021. So it's a 2-year agreement. So here, from the contract was signed on April 1st. So we're going here from April 1st through June 30th. And when we're looking at April 1st through June 30th, this is essentially 3 months for April, May, and June. That's how much time has really gone through and elapsed. I'm not doing this on a daily deal. I'm doing this on a monthly deal. So even though they're sending me the invoice on July 1st, that invoice seems to be covering these 3 months. And so the invoices here is for $24,000. So in fact, if I take $8,000 per month times 3, this is how I'm getting to the $24,000. So at that point in time, I'm going to owe them 24 grand. So what do I record? Well, I've received 3 months worth of services. So this is going to be consulting services expense. And how do I record expenses? I record expenses with a debit. And so here, this is going to be for $24,000 or the invoice amount, and this is going to be on 7/1/19. For every debit, I need a credit. Now, notice right here, they sent me an invoice, but I have not paid them. But do I owe them the money? And the answer is yes, because they performed the services for me. So this is here is going to be accounts payable. And I am going to be crediting this for $24,000. Is accounts payable a liability? The answer is yes. How do we show increases to our liabilities with credits? So that's on July 1st. On July 15th, I pay ILV. ILV pays PDI $24,000. So if I am ILV, and again, this is the perspective I'm doing it from, I'm paying PDI $24,000. So my cash is going to be going down by $24,000. Now, this related to that invoice. So for every debit, for every credit, I need a debit. What account am I going to debit? Well, right over here, and this is on 7/15/19, at this point in time, do I still owe PDI $24,000? And the answer is no, just because I just paid them in terms of cash. So here, I'm going to debit accounts payable because as of right now, I don't owe them anything. Well, I owe them for 15 days in July, but that hasn't happened yet. So right here, I'm debiting accounts payable for $24,000. Okay, so it's a really important thing here. So when I record this initial transaction, is this right that they invoiced me for 24 grand? That answer is yes. They've done 3 months worth of work of April 1st through June 30th, multiplying that by 3 to get to 24,000. Okay. On November 1st, PDI sends ILV an invoice for $32,000. Okay. So we're getting an invoice on November 1st for 32 grand. So how much time has elapsed since the last invoice? Well, we have July, August, September, October, or really 4 months, because they're invoicing me on November 1st. So they send me an invoice for $32,000. Does it make sense that they're invoicing me here for $32,000? Well, if I take this here of $8,000 per month times 4 months, which is what they're invoicing me for, getting me the $32,000. What's the journal entry I make? Essentially going to be the same one. So on 11/1/2019, I'm going to be debiting this here, or consulting services expense, for $32,000. And at the same time, I'm going to be going over here and I'm going to be crediting consulting service, or excuse me, crediting accounts payable for $32,000. So that's what I've done on this transaction right here. So they sent me another invoice. Now here I'm just paying them $15,000 cash. So here I'm paying PDI 15 grand. So how is this going to work? Well, if I'm paying them $15,000 cash, my cash is going to go down by $15,000. And then here, what account do I need to debit? Well, obviously this is partially paying down this $15,000. So what we're going to do here is we're going to show this 15/19, 11/15/19. And the first part of the video, the reason why I was talking about invoicing is that, was it smart for the company or PDI to wait 3 months to invoice me, or here to wait 4 months to invoice me? What if PDI was doing work for the world's greatest toy store, Toys R Us, which is now the bankrupt toy store? Yeah, you wouldn't get your money. And you have to really understand that invoicing promptly is very, very important. Okay. So now we get to the end of our period. And when I get to the end of my period over here, which is going to be December 31st, I ask myself the question is, do my expenses reflect the economic benefit that I've received, and do my liabilities or do my obligations over here, does that reflect the correct amount? So let's kind of think about this here. So here I'm showing consulting services expense of $56,000. And then over here, I'm showing accounts payable. When I subtract the smaller from the larger, I leave the remainder here. Is that my correct liability? Well, if we went down here and at December 31st, what's really happened here is we've received benefits of services for the entire year, or for a total of 9 months. It does not matter if a client has invoiced us or not, or if a provider has invoiced us or not, doesn't matter. We still have to show the expense. And when I'm going through and showing the expense, how many months of benefit have I received? Well, I've received benefit from April 1st through December 31st. How many months is that? Well, it's April, May, June, July, August, September, October, November, December. So that is 9 months. So the total amount of consulting services expense I should have is not going to be $56,000. Rather, what it's going to be is going to be $8,000 per month times 9. So this is the correct balance. So this is what I need to show on my financial statements, or here, correct expense should be 9 months times 8,000 per month, or 72,000. Now, what's happened here though is I have 72,000. So I should have 72,000, but I only have 56. So what do I need to do? I need to make an adjusting entry to get me from 56 to 72. How do I do that? Well, 72,000 minus 56,000 is going to give me 16,000. And if we kind of think about this intuitively, these are really the 2 months I have not yet received invoices for. I got an invoice for the first 3 months and then the next 4 months, but I never got an invoice from PDI for November and December. So those 2 months right here is going to be my adjustment. Now, for every debit, I need a credit. So in this case right here, I'm going to be crediting accounts payable, and I'm going to be crediting accounts payable here for $16,000. So my ending balance in accounts payable is going to be $33,000. So does this $33,000 make sense? Well, the total services provided during the year was $72,000. The amount paid to the provider is going to be $24,000 that I paid on July 15th, and then this other $15,000 I paid on this other $15,000 here I paid on November 15th. So if I was provided $72,000 worth of services, but I've only paid $39,000, then here my amount owed is going to be $33,000. So this is why, in terms of going through and making sure you're getting this right, it has to make sense from all sides. So what I know that this journal entry is correct because once I do this, I'm getting the proper amount here in terms of accounts payable. So that's how we go through and do a journal entry if we're given something where no contract was gone through and was involved. So let's go when there is no upfront payment, if there's no unearned revenue or no prepaid consulting services expense. Remember, from the expense side, I need to show, it doesn't matter what they've invoiced us. I need to show what I've actually used during the period. And that was 8 months, this would be 9 months, or April 1st through December 31st at $8,000 per month. So 9 months at $8,000 per month are a total of $72,000. I had paid them $39,000, so the amount that I owe them is going to be $33,000. Now let's go ahead and do this for PDI. Okay, so now we're doing the same question from the perspective of PDI, or from Park Dog. So we signed the contract with ILV. Because they didn't give us any cash up front, we don't make any type of entry. But on this first one right here, when I send ILV an invoice for $24,000, because I've worked those 3 months, or over here, April 1st through June 30th, 8,000 basically per month times 3 for a total of 24,000. What I'm going to be doing here is I'm going to be debiting, when I send that invoice out, I'm going to be debiting accounts receivable when I send that invoice, and I'm going to be crediting over here is going to be services revenue. So I'm going to debit accounts receivable for $24,000. And I'm crediting services revenue for $24,000. And this is on 7/1/19, 7/1/19. Okay. So that's how I record a revenue transaction. Does that make sense? I record revenues with credits because I'm PDI and performing the services. And then here, does the client owe me $24,000? The answer is yes. That is an asset or an account receivable. So on July 15th, 2019, they actually pay me $24,000. So here I'm receiving cash. And if I'm getting cash from ILV, I'm going to show that increase to cash with a debit. And this is on 7/15/19. But at the same time, do they owe me, does this client still owe me $24,000? The answer is no, because what's happened here is on July 15th, they pay the 24 grand. So now, as of right now, they don't owe me anything. Okay. The next one here is that I send ILB an invoice for $32,000. Should I be waiting 4 months? No, I should not. So here I'm going to send him an invoice for $32,000 or $8,000 per month for July, August, September, October. So I'm going to debit accounts receivable, and this is going to be 11/1/19, and then I'm going to be crediting services revenue on 11/1/19 for $32,000. So as we see this right here, I'm debiting AR, crediting services revenue, because the client at this point in time, I've essentially earned that income because I've performed the services, and that's what I'm going to be showing this over here as a revenue. On November 15th, I received $15,000 cash from PDI. So over here, my cash received is $15,000. Sorry. My cash received on 11/15/19 is going to be $15,000. So I'm showing that increase to cash with a debit. So at the same time, does this client still owe me $32,000? The answer is no. They've given me back a little bit of it. So here I'm going to show this as a reduction to accounts receivable of $15,000, because if they owed me 32, they paid me 15, now they just owe me 17 grand. So at this point in time, what I'm going to go through and do is I'm ready to kind of look at my accounts to see if I need to make an adjusting entry. So as I look at this over here for accounts receivable, I have an ending balance here. I subtract the smaller from the greater, leave it on that side. And then over here for my services revenue, I have a total amount of $56,000. Now, the problem comes in is that, does this represent the amount of money that I've earned during the entire period? And the answer to that is no, because I was hired on April 1st, and as of December 31st, I performed for 9 months. Or April, May, June, July, August, September, October, November, December. So here I need to have total services revenue of $72,000. So this ending balance should be $72,000 or 9 months, or this is going to be 4/1 through December 31st times $8,000. So again, I'm in the same dilemma. I need to be at 72, but right now I'm at 56. So what do I need? I'm going to need here a credit for 16,000. How did I solve this? 56,000 plus X gives me 72. 56,000 plus 16,000 gives me 72,000. For every credit, I need a debit. And what I'm going to do over here is, because I can never debit cash, remember that's what we're doing in adjusting entries, I'm going to debit my accounts receivable. And what this $16,000 adjustment really represents is that I have not billed the client for these 2 months. I billed them for April 1st through June 30th. I billed them for July 1st through December through October 31st. I have not billed them for those last 2 months. So that's what this 8,000 times 2, that 2,000 per month, that's where that's coming from. So I know that this revenue is correct, because when I take 56, I add 16, I get to 72. But here though, for accounts receivable, is this balance correct? My ending balance in accounts receivable is now $33,000. And let's kind of take a look at this kind of the same way we were doing on the last one. So I performed services. My total amount of my services performed were $72,000. My payments that I've received to date have been the $24,000 I got on July 15th and the $15,000 I got on November 15th. So the amount owed here is going to be $33,000. Is that what I'm showing for my accounts receivable? Is this my ending receivables balance? Yes. So the adjusting entry I'm going to make is going to be a debit to accounts receivable and a credit to services revenue. So that is going to conclude our discussion in terms of adjusting journal entries. We're now going to move on to the larger problem in the next video. I want to thank you for joining me today, and thank you for watching. Please do not forget to like and subscribe, and if you have comments or questions, please send them to me at 1812cpa@gmail.com. Thanks so much.